Europe is falling. They tried to forcefully unify several countries under one interest rate, one currency, and one flag. Allegiance to the unseen technocrats. Those who make the laws are unaccountable for their actions. Now today, we see the last semblance of hope in the EU. Germany falling down. We are not technically in recession yet, but without fraudulent accounting, they certainly would be. You came here for the truth, so let me unveil that for you. Today we're going to talk about what's happening in Germany. Let's get into it right away. Germany's economy shrank in the second quarter, ramping up pressure on Chancellor Angela Merkel to unleash fiscal stimulus as manufacturers reel from the US-China trade issues. Look all around the world, whether you're talking about Europe and the US and Asia, everywhere is contracting. You look at this on the PMIs, you could see this on so many different levels. We are witnessing right now a recession that is happening globally. That's what many have actually talked about. The latest report, paired with a protracted slump in business expectations, raises the risk that Europe's largest economy is on the verge of falling into a recession. It would be the first in 6.5 years. Separate data showed the euro area industrial production plunged the most in more than 3 years. In June, the economy cooled to 0.2% in the second quarter. Like I said, no matter where you look, all the stats show weakness right now. It's not just Germany, it's not just Europe, it seems to be basically everywhere. I'll show you some charts about this right now, and I'm going to give you some other details. Also, you can see the German GDP right there, red line, just showing you the contraction. This isn't the first time this has happened, of course. We have watched this occur several times since the financial crisis, but it's important to note that it is now simultaneously going all around the world. It's not just Germany, not just Europe. Feel the pain? The euro area and the most big economies disappointed in the second quarter. This just shows you a list in the euro area: Germany, France, Italy, Spain, Netherlands, Portugal. All of them, though, are looking weak. They are all dealing with massive debt and deficits that can't be fixed by something going on in Germany. If you start to see the stimulus measures taking place, whether that's coming from one particular country or we see it with the ECB or any other central bank for that matter, it is not going to fix the problems that we have today. If you see 2008 and all of the stimulus that was put into place because of that, because of those issues, it never got resolved. Everything that we saw is still going on today. We simply covered over the mess, made it look okay, but the rot is still there. Europe is likely the most exposed to global trade tensions given its high percentage of exports. This is the gross exports as a percentage of the GDP, comparing the light blue line, which is 2008, and the purple, which is 2018, and how this has changed over time. The EU has been increasing from 39% to 46%, China decreasing 33% to 20%. US happens to be the same. This shows you the reliance on exports, and at a time when you see the softening occurring in different countries, of course, that's going to have a dramatic impact. In a country where you have more and more consumption going on, domestic consumption increasing, then of course, that is a very good thing. But there are times in which this can't happen for whatever reason. People are unfortunately heavily burdened by debt. Maybe they're starting to deleverage a bit. This happens, and of course, it usually coincides with a recession. Economists' reactions to the German data resemble different shades of gloom, and you can see some of these right here. We expect a period of protracted underperformance, saying that is not drama but a warning shot. Germany's performance is weighing heavily on a region struggling to sustain momentum. Profit warnings from across the bloc suggested little sign of a turnaround. The sick man needs medicine. Hence, the German Chancellor Angela Merkel will have to unleash a new fiscal stimulus package for her country to combat the effects of the US-China trade issues. This may just do some of the trick for the Eurozone's economy. Of course, I don't actually agree that it will have any benefit, but the market might like it in the short term, that's for sure. It might help out some industries depending on what this stimulus package is. Are they simply going to go out there and support particular businesses? Are they going to bail out industries? By the way, the ECB has been doing that for a while. All the German car companies, basically all of the companies in Europe are getting a bailout right now at this time, all the major corporations, and none of that has resulted in anything, yet the public demands more and more and more. All you're doing is you're taking your tax dollars, or you are devaluing your dollars and your savings and your income, basically when they print money, and they're going to give it to BMW, they're going to give it to Deutsche Bank or any other financial establishment or major corporation. They're all getting the money, and you're not going to see any of it. Maybe what they do in certain cases is they give you $300 so you shut your mouth, but this doesn't ever flow into your hands. Now look at what happened during the financial crisis, where they simply opened up the pocketbooks and they started handing out money to all of these different corporations, right? If you would have taken that amount of money and you would have split it up, basically if you took the central bank $16 trillion in the United States and they printed up that much money, actually if you include the 16 trillion plus what was on their balance sheet plus all the others, it goes well over $20 trillion, and you divide that by all the people in the United States and simply just gave them a paycheck, I bet you that would have gotten the economy back on its feet in no time. But they don't want to do that. They want to funnel it the way that they believe is the most beneficial. That's what they tell everybody. But of course, behind the scenes, they are actually funneling money into the hands of their friends. The revolving door simply continues. Right now, the US government is essentially run and controlled by Goldman Sachs. That's not going to change, nor should you expect it to. The German government is getting ready to act to shore up Europe's largest economy, preparing fiscal stimulus measures that could be triggered by a deep recession. That's according to two people with direct knowledge of the matter. I'm not saying this is official. Understand that these are those unconfirmed sources. Okay, I'm picking up this news from Bloomberg. I wanted to bring it to you before it happens. Usually something like this is going to be talked about, discussed well before in advance, but we don't necessarily know until they make an official announcement. They may not want to wait until they get those numbers, or they may already know that for sure it's going to look bad even if it is in positive territory. Maybe they think to themselves, if it's going to be just barely above the line, they want to encounter some level of positivity, so you could see some level of stimulus taking place, but of course I will bring a video at that time. Until then, this is all we have. The program would be designed to bolster the domestic economy and consumer spending to prevent large-scale unemployment. Similar to bonuses granted in the 2009 crisis to prod Germans to buy new cars. Can you believe this? The government is studying incentives to improve energy efficiency of homes, promote short-term hiring, and boost income through social welfare. So this is what they're planning on doing. This is no different than what they've done before. They think that this is a good thing to do. They take tax money from people and they essentially put it in corporations like BMW, Mercedes, and all the rest right in their hands, making their sales go up. Now understand, if they're doing well, they're going to hire people. If they're not doing poorly, then of course they can keep people working. I get that. But at the same time, if you just keep more money in people's pockets, they will do well. They're going to spend money into the economy. You don't have to funnel it through the system in order to bail out the industries that you believe deserve it. People should have the freedom and the liberty to decide where their money comes and goes from. But of course, liberty has been thrown out a long time ago and nobody really cares, so let's move on. That's all for this video. If you found it informative, please hit that thumbs up button. You are supporting me and my work by clicking one button. I have approximately 10% or less on a video that actually click that one button, so thank you for doing so. If you want to know how to build a passive income business that could potentially replace your 9-to-5, you could build something on the side, you can have a very low risk way to invest. This to me was a no-brainer and I wanted to bring it to you. I created this course, the Amazon GPS, for people to learn. Check it out, the AmazonGPS.com. There will be a link in the description. If you want the financial education that you were not taught in the school system, these 2 books have everything that you need. Foundation, history, the asset classes, all the details. Check out the link if you want the audiobook that's available at themoneygps.com. Hold on, don't go anywhere. You need to watch this video. It got a lot of views, and I do believe that you will find it interesting. Click on it, and I will see you there.